Ruchit, what is the F&O data showing, and of course, what sort of a trade would one do, build in on the Nifty current levels? We made record highs yesterday. This morning as well, it seems like 9,200 could be taken out in the first few minutes of trade.
Yes, good morning. Well, overall trend for the market continues to remain positive. There's no doubt about that. And as also Mohit said, after a consolidation phase, we had seen a big gap up opening on Tuesday session, after which we have also seen a good follow-up momentum. So this is indicating just a continuation of trend in last couple of trading sessions. We also have seen a good flows coming in from the FIS front, which would further which would further add to this positive momentum which is going on. Now, what happens when generally whenever any stock or the index trades at all-time high, we tend to come out with the targets using a reciprocal retracements of the previous corrective moves. So if we come out with such reciprocal retracement targets, then I think Nifty should head higher towards 9,400 in very short term. The higher top high bottom structure would continue, and since even if we see the 20 days of exponential moving average has not been breached in Nifty since December to the last week of December, when the Nifty crossed 8,100 mark. So I think there is no doubt about the trend. Since there are no reversal signs, one should continue to trade with the trend and buy even at current levels, and expect targets around 8,400 very soon.
Right, that's the call coming in on the Nifty itself. Ruchit, but can you rule out profit taking today? Because it's been a good run for the last couple of days. Global markets are looking a little muted. If we do hit 9,200, could that trigger a lot, round of profit taking, consolidation, and that could mean that the markets could go back to levels closer to sub 9,100?
Well, I don't think there would be any such profit booking at current levels. The only thing that is worrying short-term traders is the overbought momentum readings that the market has rallied significantly without any meaningful correction. But one should also see that this market is showing a time-wise correction whenever correction is there, rather than price correction, which is a positive sign. Recently, we have already seen a consolidation of 12 to 15 trading sessions before this outcome of the elections results. So we have already seen that consolidation phase, and after a consolidation phase, this is a new trended phase which is indicating continuation of the uptrend. So I don't think one should get too much worried about the overbought setups, because generally whenever such strong trended move comes, the momentum readings tend to stay in a overbought zone for a longer period of time. So one should not get too much carried away, or one should not worry too much that only because we have seen significant rally there could be some profit booking. Until the prices itself indicate some sort of reversals, do continue with the trend, and this trend should continue, as I said, towards 9,400 without any meaningful corrections.
Right. Mohit, what's the play on Bank Nifty?
Well, on the Bank Nifty, similar to the Nifty, again, we're trading at close to all-time highs, if not at all-time highs. And the bias is still on the upside, because so far there's no sign of weakness. So the best way to play the Bank Nifty is have a trailing stop loss around levels of 21,150. And hopefully you'll see levels of 21,500 in the coming sessions or two. If we do open gap up today on both the indices and then start to trade lower and weak, then perhaps it's a good time to book partial profits on these indices.
Right. Ruchit, what about you? Do you like any banks in the current sort of run-up? Anything that you'd be picking up, any of those PSU banks which have not joined the party in the last couple of weeks?
Yes, definitely. We have seen some good momentum coming in the Bank Nifty. But if you observe the weightage of the Bank Nifty, then I think almost 80% of the weightage of Bank Nifty comes from the private sector banks. So private sector banks, we have seen good participation from heavyweights such as HDFC Bank is there, Kotak Bank, ICICI Bank in the recent past. But now what has happened, that if you observe the Nifty PSU banking index, then this index after a consolidation phase, it indicating a start of a positive momentum. So while Bank Nifty could head further higher, but I think the PSU space would tend to show outperformance now going ahead. Stock specific, I think some of the PSU banks which could outperform, or one which traders should look for to participate, is Union Bank, which has consolidated around its support, and last two trading sessions is indicating a good long build up in this stock. Oriental Bank of Commerce, after forming a triangular pattern, the stock has given a breakout from the pattern in yesterday's trading session. So OBC might head to high towards 136, 137 in next one or two trading sessions itself. Also PNB has consolidated around its support level and is indicating a good upside momentum. So I think one can choose any three of these PSU banks to ride the momentum for next 2-3 trading sessions where outperformance could be within the banking space.
Right, that's the call coming in from those banks. Let's talk about big movers in trade yesterday. So I want to pick up on Reliance Capital because that is the big story that we are tracking this morning. The analysts meet yesterday threw out a lot of details. The business is getting rejigged. They are looking at listing their home insurance business as well. So lots of takeaways from that analyst meet. Mohit, what's your call on RCAP? It was 9% higher yesterday already.
Well, coincidentally, it was actually a buy around 230 levels when it was 580 at around 230 tomorrow, yesterday in the closing session, and we've done up pretty well. I think we can now head higher towards levels of 650 on this, so one can continue to hold the stock. It's still looking very strong and looking good on the chart. So 650 is next. If we do get past levels of 650, then we can even head higher towards 720. So there is a potentially good upside on this stock. It will take perhaps a few months to, of course, do that.
That's the story on Reliance Capital. They seem to be moving in the right direction, offloading their stake in non-core businesses, and now will be focusing on their core business itself. They're also looking to list their home finance insurance business. Analysts clearly giving this a thumbs up because over the last 1 year, what Reliance Capital has done is it's moved away from its unprofitable non-core business activities to put the focus on core activity. Ruchit, do you track this one? Because fundamentally they seem to be moving in the right direction. They're hiving off businesses that don't do well, taking money off the table. To my mind, that's actually the right way to do business.
Yes, definitely. The company, since the company is doing good, then that is clearly reflectable in the trend of the stock. The high top, high bottom structure is already there in the stock since last, I think, some months now. And even if you observe the momentum in yesterday, one should definitely compare volumes in yesterday's trading session. I think in last 6 or 7 odd months, we have seen one of the highest volume in yesterday's trading session. And whenever we see such a kind of up moves getting supported by very huge volumes, that is an indication of a large trended move rather than just a small moves. There is also a falling trend line breakout in yesterday's trading session if you observe on the daily or the weekly charts. So no doubt this trend on the upside should continue. For very short term traders who are looking for a 1 day or 2 day, then I think 630 would be the level to watch, since that was the high registered in the month of 2014, and once that levels gets crossed, which eventually should be crossed, I think the stock should head higher towards 720-730 levels.
Ruchit, what about Adani Ports? In fact, all of these Adani Group stocks have had a very good run up this week. Is it time to take profits off the table, or one could still continue running these positions?
One should definitely continue to ride the trend, because in Adani Ports we have seen a good consolidation in last 10 to 12 trading sessions, and after this consolidation phase we have seen a breakout in yesterday's trading session, which is indicating that this is just a continuation of the trend. The volumes have also increased comparatively. It's not that significantly higher, but comparatively the volumes were also good in yesterday's trading session, which is indicating that the stock should head higher now towards 340, 345 kind of levels. So one can continue to hold on longs. In fact, any declines, minor declines, even if we get the stock around 318, 320 range, then I think one should create fresh long positions in the stock, keeping stop loss below 310 and expect targets around 345.
Right. We'll take a quick break on that note. We'll come back, track pre-open trade as well as the rupee openings, so stay tuned. Welcome back. You're watching Dealing Room. A couple of minutes to go and we'll track pre-open and the rupee opening as well. It's the currency that's kept us on tender hooks. It's been a strong run for the local currency here. The rupee ended yesterday's trade at 65.36. Now it wants to see whether it's going to be a day of profit taking, which is more than likely given that the dollar globally is looking a lot stronger this morning on back of rising risk aversion once again. Well, coming back to stock talk, Ruchit, I'll come to you first. What are your top trades this morning? Okay, I think we're struggling with Ruchit's audio, but Mohit, what about you? What are your top trades?
I'll have a bunch of buy calls. The first one's a buy on Balmal Lorry. It's seen a really nice up move in trade yesterday. Now we can see levels of 240. It's a buy with a stop around levels of 225. This is actually a very good longer term buy as well. Another buy call is on PC Jewelers. We've seen a really nice up move in trade yesterday, and this can continue towards levels of 435 in the coming couple of sessions. It's a buy with a stop around levels of 412. The third buy call is from the metal space. Hindalco is looking good in the charts and can rise higher towards levels of 205. It's a buy with a stop around levels of 196. And the last buy call is on Syntex. We've seen a really good up move in trade yesterday. Here we can see levels of 105 next. It's a buy with a stop around levels of 99.
Right, that's the call coming in this morning's trade. Mohit's a bunch of buy calls out there. Mohit, a couple of other big stocks that we saw sharp moves in yesterday's trade. PC Jewelers, in fact, it's not just PC Jewelers, a lot of these jewelry stocks have been doing well. So Titan is another one that's had a good run.
Well, yeah, PC Jewelers is one of my buy calls today, and like I said, it can head higher towards levels of 435, actually even 450 for that matter. So this is a really good chart. It's given a nice fresh breakout on heavy volumes yesterday, and there's a considerable amount of upside that can be seen on PC Jewelers in the coming couple of weeks. As far as Titan goes, even this is trading at all-time highs, though perhaps it's not the best entry point right now because we've seen a nice up move from levels of 440 to 465. But nonetheless, I think in the coming few weeks, given the state of this rally, we can easily head higher towards levels of 500. Just one thing on the metal space, the whole metal sector was rallying pretty strongly yesterday in trade after a reasonably couple of weeks of correction and sideways movement. So even Tata Steel actually is looking good in the charts for about 510 to 515 levels. It's a buy with a stop around levels of 495.
Right, that's the call coming in on a couple of those counters in today's day of trade. Well, I'm just going to talk about Reliance Capital because that is the big story, and that is one stock that you want to watch out for. Keep your eyes out for this one. There was an analyst meet yesterday where the firm has indicated that they would look at divesting its stake in non-core businesses that include stakes in travel portal Yatra, Sula Vineyards, and also radio and television business. They will also be looking to list their home finance insurance business. Over the last one, you remember Reliance Capital has been on a spur to go out there and, of course, sell out, offload stake that they have in unprofitable ventures. List, of course, the home life insurance business. That is one thing that's on the cards too. Just to give you some perspective on the life insurance business, it seems like foreign players could be eyeing stake in the life insurance business of Reliance Capital. They are looking to focus and keep the focus on traditional products, and that's going to be the key business that they will be focusing on. 3,074 crores was the embedded value of their life insurance business last year, up 12% from the previous year. Nilesh Parekh, Associate Director, Wholesale Capital Markets of Edelweiss, joins in. Nilesh, were you at that analyst meet yesterday? What did you make of Reliance Capital's plans? They are doing what any business should be doing, offloading unprofitable businesses, looking at listing their home finance insurance business. So clearly the direction is very clear. They're going to focus on core business and get rid of everything else.
Yeah, good morning. And yeah, so I think the message was very clear yesterday that, they're trying to, so they've always been in the right businesses. I think that's something that we've always said that, given what is happening to the financialization of savings, more from physical to, financial savings. And, all these entities, asset management, life insurance, general insurance, are the beneficiaries of that trend which is emerging. And Reliance Capital being in those right businesses should be a clear beneficiary of that. However, what we've had seen that, there were certain businesses like the insurance business, both the life and the general, were running at suboptimal ROEs. And the commercial finance business had also not achieved a good scale-up. What we've seen and what the message was very clear yesterday, and with the key hires that they've done over the last 6 months, is that there's a major focus on getting the profitability in those businesses back and get to, the average ROEs which most of the industry players command. So with the focus on those profitable business and trying to reduce the dependence on the non-core assets, I think is the right strategy that the management, and coming from Anil Ambani, I think puts weight behind those that strategy. And we see now the focus is on execution, but with the right set of people, I think that should be something which is just a matter of time.
They're also looking to, I believe, sort of carve out retail health insurance business from its subsidiary. How is that going to play out, A? And B, I think they're looking and talking to foreign players to sort of play this market in order to, have better reach, have better return. Is that also something you'd garner for and say it's the right thing to do?
So very clearly, I think the emerging focus is on health, and I think that the carving out specifically the health business also gets its due focus. And I think they've nurtured partnership with Reliance, means with the Nippon Group, both on the AMC side and on the life side. I think very clearly, they're open to strategic partnerships, and that's what the chairman also alluded to. That given that there could be opportunities, they are willing to actually look at kind of divest and lead value creation some of these entities.
So Nilesh, where will the value unlocking come from now with Reliance Capital?
So one is the clearly the divestment of the non-core businesses that they are focusing on. So that is one for sure. And the second is, as I said, there could be a value unlocking in the general insurance business and in the health insurance, where they could get a strategic partner, because both these entities, Reliance Capital owns 100% of the business here. So you could see some bit of value creation there, and obviously there's a separate listing of the home finance, which is something which is obviously currently only to the existing shareholders, but we will see that also leading to a separate value creation emerging in the business.
Nilesh, I know it's always tough to put a number to how much value is going to be created, but of course, on one hand, if they're looking at getting rid of unprofitable businesses, non-core business like Yatra, case in point, listing their home finance business, getting into retail health insurance, all of this put together, how much of value, I mean, can you even give me a number? Do you have any sort of numbers in terms of the embedded value of all this?
Well, very difficult to kind of put a number there. But all I can say, there are some of these businesses, one is, the value unlocking, right, which is just one part of the, upside which can emerge. Second is, if they get the businesses that they're currently in and, focus on, getting those profitability back, I think that is a big kicker. So, just the case in point is when you look at some of these, the general insurance business and the commercial finance business. Today, the general insurance business, most analysts on the street would be valuing at about 1 to 1.5 times price to book, and there's a certain deal which is being talked about for ICICI Lombard, where the foreign partner who wants to exit and trying to get some of the other guys to come on board is asking what the newspaper reports quote is anywhere between 4 to 5 times price to book. So obviously there's a difference in profitability as it stands today, but if it's on for Reliance, it's on an improving path. So I think there's a clear upside which can emerge from getting the businesses right, and I think that's where the management. So near-term triggers, yes, could be some divestment, but I think the big game changer for Reliance Capital would be getting those businesses right. And now for the first time, I think we can comfortably say that they've got the right set of people to run those businesses, and that can lead to a major scale up.
So Nilesh, I had to ask you on the stock, what would your call be? Now, like you said, they seem to be moving in the right direction. Divestment is only part of the story. But with the right people there, with plans of turning the company around, would you be bullish on the counter? Is this on your buy list, or would you still be circumspect?
Well, so, we've been a buy for, because, the inherent value, if I put everything together, despite all those the recent changes, still we had put a value of about 661. So not factoring any upside emerging from improvements in businesses. Now, if we have to start baking in some of those improvements, I think the upsides could be significant. So that's where I think we continue to put that as on a buy list. Yeah.
Multi-bagger. Nilesh, good talking to you. That's the kind of faith Nilesh Parekh has in Reliance Capital. He's been a buyer on the counter, very clearly stating that divestment, value unlocking is only part of the story. And of course, it's Reliance Capital that is working to turn around the business, turn more profitable. Its insurance business at 1.5 times its price to book versus its competitors in the industry, which are currently going at 4 to 5 times price to book. So steps in the right direction. They've got the right sort of people, like Nilesh said, and that could be a trigger, and the stock could be trigger happy in the near term on back of all these recent developments. We also have with us, I believe, okay, we've got Nilesh Parekh has left us, but we've got Sameer Dalal now in the studios with us. Sameer, Have you been tracking Reliance Capital? This is the story, rather the big story this morning. Value unlocking, trying to turn the business around. What are you doing with this one?
So yeah, Reliance Capital is something we do track, and we have been positive on it. Now they are working on in the right direction to reduce some of the leveraging. I mean, reduce some of their non-core assets, but it's not going to be that easy. The valuations that they want for some of them are not going to come that easily. So even though we are positive on the company, we think it's run up too fast, too quickly, and you will get opportunities in Reliance Capital at lower levels. Every company today only comes out and says we are working on fixing our ROEs. It started with L&T Finance, and you see how the stocks moved. I think Reliance Capital is taking a page out of that and just saying the right things that the market wants to hear. So, yeah, even though we are saying that the long term looks good, there's no need to rush into it at the moment. I think the run-up's been quite significant in the near term. So, wait, you'll get your opportunities and pick into them then.
Right, we've also got this Nitesh Jain of Investec Capital joining in. Nitesh, what is your take on that announcement that came through from Anil Ambani last evening? They are looking to divest their stake in unprofitable businesses. On one hand, they're looking to list their, of course, home finance insurance business, enter into the vertical of health insurance, health retail insurance. All of these things, how do these pieces fit into the puzzle?
Yeah, firstly, what it does, it simplifies the corporate structure for Reliance Capital, especially on account of demerger of Reliance Commercial Finance and separate listing of Reliance Home Finance. Secondly, with the simplification of corporate structure, it will be slightly easier to understand the financials and understand the performance of NBFC and home finance business for Reliance Capital. Thirdly, the divestment in non-core asset is quite a big positive. I would like to highlight one key point is that they have been saying that they will divest these non-core assets for quite a bit of time now. I think during this analyst meet, they have re-emphasized on that point, and we will be very closely watching their trajectory of this divestment. They have around 2,000 crores of listed and unlisted equity investment and around 8,000 crore of loan book. And if there is a substantial reduction in this loan book, which they have loan book plus equity investment, which they have guided by the end of FY18, that could be quite positive for the profitability and return ratios of the company, because equity investments are not earning anything for the company and in terms of P&L action. And on the loan book also, the interest rates are, the return ratios are quite low.
Yeah, just break this down for me, because value unlocking is only one part of the story. The other, of course, is trying to turn the business profitable. In terms of value unlocking, what is the kind of embedded value you're assigning to the life insurance business?
So life insurance embedded value is somewhere around 3,000 odd crores. But life insurance, they have already sold their 49% stake to Nippon Life at a very premium valuation of around 11,500 crores. So I don't think in life insurance there will be value unlocking. Value unlocking will happen mostly in general insurance business, where they are now looking for a partner, and hence they have separated the entity into two portions. One is pure property and casualty insurance, and the second will be a health insurance vertical.
What's that? Okay.
And they own 100% in both of these entities, so they can sell 49% stake to a foreign partner and monetize their investment.
I'm not sure if you'd have details on this, but do you know the kind of values we are talking when you talk about the general insurance business?
So general insurance, if I compare with the recent transactions in the space, the valuation of this entity could be around 5,000 to 6,000 odd crores. For Reliance Capital 100% stake. But I think the major value driver are two pieces. Number one is their AMC business. The AUM growth have been quite sharp on back of very strong inflows and market movement. So as of Q3 itself, their total AUM was 2 lakh crores. And they hold around 60% stake in that. That would be the one big value driver. Second value driver is the commercial finance and home finance business, where they have been the loan book growth have been quite low for last 4 or 5 years in high single digit. The other NBFC have been able to grow at more than 20% plus. So if they are able to show growth with 15-16% sort of ROEs, there could be a significant value creation in those businesses. Life insurance, actually, they have been struggling because they don't have any bancassurance partner, and I don't expect life insurance to be a big value driver over a medium term, even from a 2 to 3 year perspective. General insurance we need to closely watch out for, but the clear value driver can come from asset management business and NBFC business.
But like we said, value unlocking, divestment is one part of the story. Do you have the kind of faith in Reliance Capital that they will manage to turn the business around? Because, I mean, as compared to their peers, they're still lagging quite far behind.
Yeah, so in terms of market cap, they are lagging quite a far behind. And in terms of businesses also, I will say, apart from asset management business, in other businesses, they are still lagging far behind their competitors or peers. So one part is that the valuation itself is very, very low of the holding company, and if they are able to show clear path of divestment of non-core investment, there could be a value creation on account of that. Second is, I think there is a quite headroom for improvement in performance in NBFC business. And with the change in management, I think that could be quite a big of focus area for the management team. So these are the two, I think, things that I will watch out for.
Lastly, Nitish, do you have a buy call on the stock?
Yeah, I have a buy call on the stock.
What's the target?
So the stock has run up quite a bit, and I don't. I need to revise my target price. So and it's not in public domain as of now, so I cannot talk about the target price.
Right. Thanks for that, Nitish. Good talking to you. That's the view coming in from Nitish Jain on the analyst meet and Reliance Capital looking to recheck their business. Samir, let's quickly talk stocks. So apart from Reliance Cap, which will be the big story that we are tracking this morning, what are you doing with some of these banks? So the market has become mature, but it's making a clear diversion between or differentiating between good quality private sector banks. So valuations could be a question mark. And of course, PSU banks are big NPA concerns. Where are you putting your money? And if you like the PSU sector, which are the banks that you'd pick up there, where you think there could be some divestment, some value unlocking coming sometime down the line?
So you're absolutely right. There is a big differentiation that's happened in the banking space, and not only between private and public banks, but also between private banks. So the likes of IndusInd, the likes of HDFC trading at much, much higher valuations, and the likes of ICICI and Axis trading at cheaper valuations. And then, of course, you have your PSU banks, which are trading at, far below book value. So we do think that there will be a valuation catch-up once the cycle turns in the corporate sector in some of these large corporate banks in the private space, which is ICICI and Axis. So we are recommending to a lot of our clients that ICICI is the right buy at the moment. Once the corporate sector turns and the NPA start coming down, the valuation gap between the private banks and the other private banks like HDFC, IndusInd, Yes, Kotak, and ICICI and Axis will start reducing. And as that happens, the valuation multiple will lead to a great upside in these stocks. Whereas in the likes of HDFC and IndusInd, you may only get the upside in the growth of the businesses. So we are recommending ICICI Axis. In the PSU, we do think there is a lot of value, but we think it's better for the time being to be in the larger PSUs where the capital can come through quite easily, because a lot of these banks are so poor on capital that they're not going to be able to grow their books. So maybe Bank of Baroda, where the capital adequacy is ample for them to be able to grow their book, and SBI, where they have ample capital, plus raising capital for them is not a difficult thing. So they might be an interesting prospect. So we think 4 banks could be something you could look at in the larger space. And then, of course, you have some of your mid-cap banks like South India Bank or a Federal Bank, where valuations are attractive, growth could come through. So those could see a good move up over maybe a year period, and those are small investments that you can also make.
Very quickly, I've got a minute before market opening, but what's going on with some of these Adani stocks? Would you go out there and buy Adani Port, Adani Power? All of them have been on a roll in the last couple of weeks.
So Adani Port is something we've been quite bullish on, and for the reason we've been bullish on it is if you look at the kind of operations they've scaled up, that is the number of ports that they're managing across the country now. If the India import and export business were to start growing and thriving further, you would have to use some of the operations that they have, and they've put in all the capital. The utilizations for these ports is still significantly lower than what it can have. So as that utilization levels start rising, you'll see the return ratios increasing, you'll see the profitability increasing, and you'll see these stocks actually trade at higher multiples, and also you'll see with the earnings growth, I mean, even that would start playing in. So you'd see Adani Ports doing really well, I feel. The other Adani stocks I don't have coverage, so I don't want to comment on at the moment.
Ruchit, very quick, what's your... Okay, I've got 10 seconds and I've been told I should stick with market opening. I'll come back to you in just a minute. But it seems like it could be a positive start for D Street. Watch out for banks, because that's pretty much where the big gains have come from. 91, 94, and that's not a bad start in pre-open. 37 points higher, 0.4% gains on the Nifty is what we're getting in right now. Well, a couple of big movers and shakers that I'm waiting for my screen to upload, but you've got the broader markets that are doing as well. The Nifty mid-cap and small-cap index are trading in line. Bank Nifty seeing some underperformance in today's day of trade. Well, amongst the big movers, ITC is topping that list. It's a big move coming in on ITC, 4% higher on back of clarity coming in on that CES that has been capped for Sin Products. The stock is up 4.5% in trade this morning. So huge positive reacting to getting closer by a step to GST on that GST front. The CES capping set on CES for demerit products. Wipro is looking good, so 4% gains on Wipro is what we're getting. Actually, it's percent gains on Wipro is what we're getting in, so 0.7% higher on Wipro. Hindalco continues to move up, 0.7% higher for Hindalco as well. In fact, metal names are all doing quite well. Tata Steel is also not too far behind, 0.6% higher is what we're getting in. Lupin has got an FD approval for a new drug. The counter is reacting positively to that news too. It's 0.5% higher on that stock. Aurobindo Pharma is up 0.5%. Reliance Industries is about 1,303 to be precise, is what we're getting in on Reliance. Pull up Reliance Capital, because that is the big one you want to watch. The stock was up 8% ahead of that analyst meet yesterday, with the company looking to rejig the business. The stock is up only about 0.6%, but this could be because it went up quite aggressively ahead of that analyst meet. So what you might be seeing today is a bit of a consolidation on back of that. There were no ugly surprises. Anil Ambani clearly indicating that they are on track to focus on their core business, clean up that debt that they're sitting on. And of course, it's going to be gradual, and that's probably why the markets are not getting too excited just yet on that stock. 610 on Reliance Capital is what we've got. Well, apart from that, across the banking horizon, ICICI Bank, Yes Bank, Bank of India and Bank of Baroda are the few banks that are trading in the green. HDFC, IndusInd, Kotak Mahindra Bank are taking a bit of a breather in today's day of trade, but it's Yes Bank, it's up 0.3%. Once again, 1532 is what we've got on the counter. In the mid-cap horizon, it's all your metal names that are doing well. Jindal Steel is up 2.5%. You've got Torrent Power as well. That's another one that's been on a tear in the last couple of days. Looking good again, 1.5% on Torrent Power. Walkard is having a good day. Indiabulls Real Estate, Marikkowa, all trading quite firm. In the small cap space, you've got Dalmia Bharat, that's looking good. Balmer Lorries having a positive day. So small cap stocks are also having a field day, but it seems like the focus remains on news-driven counters that are reacting in today's session. GST clearly being the big trigger point for ITC, and that counter trades up about 5%. Reliance Infra, if I can pull that up, at their board meeting they decided, or rather approved, raising 2,000 crores through a QIP. The stock is down 0.3%. Ruchit, you want to come in on ITC, 4.5% gain on the big wig.
Yes, definitely. There's a gap up opening today after a consolidation, which is quite a positive sign, and hence I think this trend should continue. 270 now would become a very strong support for the stock. So till this stock is trading about 270 from short-term trading perspective, one can look to create long positions and can expect target around 292 in short term.
Samir, what are you making of ITC? I mean, the cap on CES of Sin Goods is clearly playing out as a positive for ITC. 4% this morning on the counter.
Yeah, so all these kind of news are always good, but we always have had a positive call on ITC, and I continue to think that the market sometimes focuses too much on what the near-term small newses are. Sometimes you hear of excise duty, sometimes you hear of other things. At the end of the day, ITC will continue to do well. It's a business that is going to grow from the cigarette side. People don't stop smoking cigarettes when small price changes happen. They are able to pass on, they're able to defend their margins in ITC. So that's one. Second, the FMCG side of the ITC business is starting to see a lot of traction. So what's happened is they've now got their entire distribution network in place. They've got their entire retail reach out in place, and now they are getting more and more traction with more products also being launched. So as those things keep happening, I think the FMCG side of ITC is going to start delivering a good amount of profitability. And I think that is one of the reasons we're kind of bullish. We think apart from the cigarette, the FMCG business will lead to value unlocking, and the stock could probably see much higher levels over the next couple years. So we think ITC at any correction would be a good buying point.
Anything else in the consumption space that you're betting on?
So I think it's more of the consumer discretionary than we have to bet on.
As opposed to staples.
Up across from, I mean, in the staples, you have a lot of competition that's come in. You already have, you had the news the other day that HUL is kind of, Unilever is giving a kind of a thing to HUL that you need to start propping up sales because volume sales are not happening because of competition increase.
Yeah.
So I think there's a lot of competition there, and you're not going to see a major uptick. But I think with the discretionary spend, you're going to see more. Okay. I think the opportunity there is larger, be it small discretionary tickets of movies or just whatever whatever that is, or even the larger ticket sizes like cars, two-wheelers, those are going to see a great uptick. Jubilant
and you're
Foodworks.
not concerned about valuations over there either.
So some of them you have to worry about valuation.
Like in Jubilant, case in point, right?
In Jubilant Foodworks.
Yeah.
Well, at 800 it looked very attractive. At 1100 I'm not so sure. But then you got to realize that valuations in something like a Jubilant Foodworks can look very expensive today. But if same store sales growth comes through, the valuations could look not very, very expensive in the sense because 75% of my business revenue is gross margin, which means that only 25% of my cost goes down to the operating level. Why? Because all my costs are fixed in nature, whether it be rental cost, whether it be employee cost. I have all these people, whether I'm able to sell that product or not sell that product.
So fixed cost stay.
It's a fixed cost business. Now, the minute I sell more of that same product from the same store, bulk of that translates down into my profitability. So then valuations will suddenly look not so expensive, and then everyone will start going out to chase the stock. So I think there is a reason to think that a lot of these kind of companies, be it a Cafe Coffee Day, a Jubilant Foodworks, Westlife Developers
Tata
is just
Global
about
potentially.
Tata Global is not exactly the same. Tata Global has a lot of marketing spends that they have to do from the Tetley brand, and it's not exactly that they have their stores. Jubilant, Westlife, Cafe Coffee, they have already put in all the capital for that store that they have, and the costs are running through. So sale increase will be a lot more profitable, whereas in the case of a Tata Global, Tata Global does have Starbucks, but we don't know what the value of Starbucks should be. It's still a very small component in the entire operations, plus they own only 50% of it. So should you play for Tata Global Beverages for 50% of 100 outlets, or would you play for a Cafe Coffee Day where they have 1,500 outlets already in place, and the operating leverage could start kicking through?
Mohit, what are you making of this morning's opening? And if you've identified any big movers that one could do a positional trade, maybe just for today?
Well, a couple of stocks that are looking good. One is Indigo, basically the flying airlines, rather. Airline stocks are looking good, and this can now head higher towards levels of 940 to even 950 zones. So one can buy Indigo with a stop around 900. Even Jet Airways is seeing a nice up move in trade today, and this can head higher towards levels of 500 next. It's a buy with a stop around levels of 474. As far as the index goes, we opened higher and cooled off from the day's high. I think we will kind of consolidate sideways, but as long as we trade above levels of 9125, 9130 on the Nifty spot, I think you should continue having a long bias. Another mid cap that's actually catching my eye is NoSil. It's trading at all-time highs and looking good on the charts. This can head higher towards levels of 95 in the coming few sessions. So it's a buy with a stop around levels of 85.
Ruchit, I don't know if you're tracking Jet Airways. The stock is up 3.5%. In fact, all your aviation counters have seen a good opening right now.
Yes, we've already seen a consolidation phase in the stock for a period of, I think, 3.5 months from mid-November till the start of this month. Now, what has happened after this consolidation phase, when the prices have started moving higher, it has started attracting quite a good amount of volumes also. So, whenever we see after a consolidation, prices moving higher and good volumes coming in, that is usually a positive sign and sign of a good trended move that could come in short to medium term. And even in today's trading session, we have a gap up opening which has breached its 200 days of simple moving average. So I think this trend should continue on Jet Airways, and on the higher side we should expect level somewhere around 505 in 1 or 2 days. And if anyone is looking this from a positional perspective, at least for around 1 month, then I think the stock could head higher even towards 550 levels.
That's the call coming in on some of these aviation names. Sameer, with the way crude prices are moving, and I mean, I know OPEC members are not going to be happy with crude at 40. But for whatever it's worth, there is pressure on that commodity in the recent few days. Is that turning out to be a positive for aviation? Could that explain today's run-up?
So it is a positive for aviation when fuel prices come down. But by looking at aviation prices on a day-to-day basis, I don't think it decides how profitable a company is going to be. And we got to see what is the price range of crude going to be. So we feel the price range for crude will be anywhere between $50 to $60. We don't see it significantly sliding below that. And given the way, if they remain at that price, I don't think it's going to be a major game changer for the aviation sector. Now, aviation is a sector I've never been very, very comfortable with, for the simple reason that if a flight goes off with low capacity loads, and if they're not able to sell off those tickets, it's gone, it's done with. And those kind of businesses do scare me a little bit. I don't think they've been very profitable in the past. I don't see them being very profitable in the future. Yes, Indigo is one that stood out, but if you look at it, look at Jet Airways history, look at Air India, look at Kingfisher, what happened. So SpiceJet almost went into bankruptcy, and I mean, yes, they've come back with some of the benefits that crude has given, but eventually competition will again come back, and once competition again comes back into the space, ticket prices come under pressure. I think you're going to see the aviation stock start peaking out.
Right. Ruchit, Suzlon has been a penny stock, but there's enormous amount of value in that one. At least that's what a lot of multi-bagger ideas kind of analysts believe. It's very slowly and gradually crawled up to levels of 18 right now. Do you track this one? Do you have a call on Suzlon? Does it still look attractive?
Yeah, so if we observe the positional charts, a bit of long-term charts, then I think the stock has good resistance coming in around between 19 to 19 and a half. Because earlier what was happened before February 2016, that is almost a year back, 19 was acting as a good support for the stock. And once that stock had breached that support during the month of Feb 2016, then post that almost more than a year, the stock is not able to cross that support which has now acted as resistance. So it would be very difficult for the stock to cross this 19.20 range, which is a resistance. Once I think the stock passes this 19.20 and gives a closing about that, then one can look into enter into the stock if from a trading perspective. But as of now, I would tend to wait for the breakout about 19.20 levels on a closing basis.
That's the call coming in on Suzlon. Sameer, have you been tracking some of these JP Group companies?
I don't track JP, but I do track Suzlon, so if you want, I can give you.
Yeah, sure, fundamentally on this one.
So I think it's a great turnaround story, if you ask me. And why do I say that? I think the investment that's going to come into the wind energy space over the next 4 or 5 years is going to be quite significant. We already see that they've been able to scale up their operations from 400 megawatts 2 years ago to they're going to be about doing 1.4 gigawatts in the current year. That's 1,400 megawatts. And they are going to keep increasing their sales. They have capacity up to 3,000 megawatts a year. So even if they can get to 2 gigawatts, that's 2,000 megawatts by next year, I think the profitability for the company is going to increase. The deleveraging, they've gone through a massive deleveraging that will continue. The debt repayments are now staggered, and they are further pushed back, so they're not going to have any problems with cash flow. The opportunity for them is large. They're getting into solar, they're getting into the hybrid model which they're trying to push. So I think Suzlon, actually what you mentioned earlier, could be a multi-bagger. It could be the case. Going from here, I think Suzlon is a great investment story.
Mohit, ITC, what's going on? I mean, it's a cigarette cess at 290% cap and ad valorem, or a combination of both that's giving a bump up to ITC. On the charts, 6% higher.
Well, it's seen a really nice big up move in trade today, and now it's trading close to all-time highs. You had that one-day spike where it went above levels of 290, but apart from that day, I think this is the highest level it's trading at right now. We could see levels of 290, 295 in the coming few weeks on ITC, so one can still buy this. You have a stop loss around levels of 277, which is around the today's low for targets of 295.
Right, that's the call coming in on ITC. Ruchit, what are you doing with metal names? Stocks like Hindalco, Tata Steel, Jindal Steel have all been on a tear in the last couple of weeks. Still looking good to you. This week has also been very good for metals, and those are the ones that are leading the markets from the front.
Yes, definitely the entire metal pack has led the market. We have seen since almost more than a year now where this uptrend has been continued. And in last 1.5 months within an uptrend, some sideways consolidation has already happened in this metal sector stocks. And yesterday we saw a good amount of upmove in many of the stocks with good volumes coming in. So I think this is I think this uptrend would continue going ahead. Stocks which would that could outperform within this space is one of them is JSW Steel. After a consolidation, prices have taken support near the 89 EMA. And after this support, we have seen the price breakout with good volumes in coming in the stock. So I think this could head higher towards 205, 210 in very short term. Another stock from the metal space would be Steel Authority. Even this stock has formed a good support around 58, 59 levels and has again resumed uptrend with very good volume. So I think it could head higher towards 72 odd levels in short term. Tata Steel also seems to be looking good, that it has completed its consolidation phase, and even on longer term charts, on monthly charts, during last month the stock had given a breakout of its long term falling trend line resistance. So I think this is just a continuation of the uptrend in entire metal space as a whole. If anyone is looking from a trading perspective, one can focus on these three stocks: Tata Steel, JSW Steel and Steel Authority.
Just to mention, the Nifty has hit levels of 9200 for the very first time. So this is uncharted territories. Bulls clearly in control of the markets right now. Over a 100-point rally was seen in opening. We're off those highs right now, but still worth a mention. The 9200 did get seen in the first couple of minutes of trade. ITC, in fact, FMCG's names are the big gainers. ITC is the one that's leading the way up. Abneesh Roy, research analyst at Edelweiss, now joins us. Abneesh, ITC clearly getting a good reaction on the fact that the cigarette cess has been capped. How much of a positive is this?
Yeah, this is quite positive, although structure details are still awaited. The statement by the Karnataka minister, who is part of the GST Council, that it will be largely neutral to the current overall taxation is definitely positive. ITC, if you see, the valuation comfort is there versus the rest of the peers. And we have seen two soft budgets. Why is government going for soft budget is government tax revenue collection also is high when taxes increase on a moderate basis, and that's why we don't expect that even in GST change, we don't expect significant tax increase. It might go up a bit only, which is manageable. But what will happen is overall ease of business will be there because across all states it will be a single taxation. Currently, if you see VAT rate, almost every state is different. So there is smuggling which happens. There is not proper planning in terms of brand launch which can happen. Those things will get addressed in GST, and of course in GST and also in demonetization we have seen that the illegal cigarettes get impacted, and GST will again drive that because in GST compliance of taxation and the companies will be much better. So we are quite positive. ITC is among our top picks, and we are more positive based on yesterday's development.
Right. Abneesh, just help me with this, because currently on the tax on cigarettes is a mix between ad valorem and a specific tax, and clearly VAT is ad valorem, excise is a mix of ad valorem and specific tax. So how is that equation going to play out? Any clarity on that has emerged?
So in cigarettes, dual tax structure will continue. Currently, VAT rate is around 24-25%. That will be replaced by the GST rate of 28%. Currently, central excise is there. That is not ad valorem. That will be replaced by the cess. Now, cess is something which government has proposed to compensate states for the next 5 years, and that's why they have kept a cap. And this cap doesn't get implemented in the GST, which is going to happen from July. This is proposed cap over the next 5 years. So, yes, full clarity is not there, but
the structure, if you see ad valorem in India has happened twice in terms of cigarette, but both the time it has been rolled back. So we don't expect the ad valorem completely, but already VAT is anyway ad valorem, so that will be replaced by GST. But the central excise we still believe will be largely fixed in nature. Full clarity is not there, but overall taxation will be similar to the current levels.
Right. Abneesh, thanks for that. That is the call on ITC, a reaction to the cigarette cess being capped at 290%. Clear positive, ITC is trading 6% higher. Take a look at how VST and Godfrey Phillips are doing, because those are the other two cigarette players in the industry. Even though ITC is leading the way up, VST is up 4%. It's not too bad either in today's trade. Godfrey Phillips is also reacting positively, 4% higher on that one. Just a mention of some other news that's come our way. It's Punjab government has renamed the Punjab National Highway as District Road, and the trigger for doing this clearly is to allow wine shops to come back on the road and continue with business. Clearly the Punjabi in the decision, so it's a big one, non-market related, but nevertheless interesting to see the entrepreneurial nature of that state and how they're working their way around in order to continue with business from wine cellars. We'll talk about that in more details through the day on the channel, but we'll take a break. We'll come back. We'll talk about India Inc. because with the rupee's violent moves, it seems like India Inc., which clearly seems largely unhedged, what that could mean for the industry.